Welcome, I'm Sharon Calhoun, Managing Director at Vector Wealth Management, and today I'm joined by Tom Lyons of Phelan Partners Limited, which is a merger and acquisition firm in Golden Valley. Tom, welcome to the show.
Thanks, Sharon. Good to be down here at Vector Wealth Management and see you today.
Well, Tom, we have a very interesting topic for today. We're going to be having a conversation about his experience with business valuations, increasing your enterprise value, along with an exit strategy and how to maximize the value of your business. But Tom, you have such an impressive background. I'm not even sure where to start. So I'm just going to read a few of these if you're okay with that. You are a frequent speaker and host of today's Business Radio. You are the author of the acclaimed book, Exit Strategy, Maximizing the Value of Your Business. You are actively involved in the BeyondTheYellowRibbon.org program to help support our troops and their families. And I do know that you are a Vietnam veteran of the U.S. Air Force. And so I know that this cause is very near and dear to your heart. So we would like to learn a little bit more about that. But you're also the host of the Minnesota Military Radio. And you are a member of the board of directors of the Minnesota Military Family Foundation, which provides emergency grants to Minnesota military families. I know with all those last items that I just kind of mentioned, and I went through them quickly, you clearly have a very philanthropic passion. And to support that, we're actually going to be having a separate podcast with Tom and my colleague, Chris Wagner. So tune in to that podcast to learn more about Tom and his background, particularly as it pertains to his charitable intent and his philanthropic work. And Tom, I know that, again, you've recently started a new charity foundation or a charitable foundation here in Minnesota, the Minnesota Veterans Pantry, to help pay for food being distributed to our veterans in need. And so again, I do want to just pause for a second, say thank you for your service, and thank you for what you're doing with all of these charitable organizations. And we look forward to learning more about those organizations and about your involvement in our podcast with Chris Wagner.
Sharon, thanks for that. And as an old Vietnam veteran, it just feels normal and natural for me to try to reach out and do what I can to help my fellow veterans. So it sounds like a lot, but I've been around for a while.
Well, and I also have to add, I would be remiss if I didn't add that you are also a client of Vector, and you have been for a few years now. And again, we appreciate the partnership that we have on a personal level with you, but also on a professional level with you as well, because we have referred a number of our clients to you as it pertains to our topic today. Because, I mean, let's just face it, we do have several business owner clients, and the question that oftentimes comes up is, how do I exit from my business? And for many of our clients, it could be about passing it down to the next generation. But for many others, the question is just like, what do I do? Or when do I start? And often without having these answers, people tend to oftentimes kick the can down the road. And so, Tom, again, I'm just so excited to have this conversation with you today and to learn more about your business and how you can help our listeners.
Sharon, it's a normal conversation. Your listeners don't know, but I've been working with Tom Fee at Vector Wealth Management for a couple decades now. And the underlying reason is we start at my firm, Phelan Partners Limited, with planning and preparing for the eventual sale of a business, so that when you finally get there, you know it's the right time to sell. The business is worth enough money to help you accomplish your goals from a wealth management and estate planning standpoint. I've brought in many clients that thought they were ready to sell, sat down with your firm. We put them through your system called Sojourn. And once they dial in all their assets and all of the income and all those things, they can see visually right in front of them, am I ready or not? Or are there other things I can do to be better ready and know when it's the right time to pull the plug? So it's been a great partnership for for many years to help business owners figure out how much is enough and what's the right time to sell.
Yeah, and well said, Tom. And thank you for kind of putting that little plug in there for Sojourn. For those listeners who are not familiar with Sojourn, Sojourn is a proprietary kind of tool that we have created, and we're very passionate about it because it is something that, as Tom was alluding to, it kind of takes your very specific situation, and it allows us to map out, to Tom's point, do I have enough or do I not? And if I do, right, what decisions do I want to make today? And if I don't, then what decisions will I have to make so that I can get there? So Tom, let's just kind of start from the beginning. If I'm a business owner, and you always hear about valuations, right? Can you just describe to our listeners, what is a business valuation? When should I get it done? And how often should I have one done?
Well, Sharon, that's kind of a different answer for different types of businesses. If you're involved in an ESOP, an employee stock ownership program, they get a business valuation every year. Most business owners don't need that. They can sit down with you or they can sit down with their CPA and say, what do you think my business is worth? And then what do you think it might need to be worth in order to accomplish my goals? What we find out in most instances, that the business owners hope and wish that their business is worth a lot more than it might be. And number two, have they done their wealth management planning? Have they done their estate planning? Do they know what they want to do with the proceeds of the value of the business and the money they've earned during their life? Do they want to pass it along to the next generation or maybe skip a generation? And what are their wealth management goals? A lot of the business owners, it's just kind of basic. What are you going to do when you retire? Do you have a house in the city you live in? Do you have a retirement home, a lake home? What do you need in terms of income to support your style of life? And what do you want to do for the next generation or the generation after? So that's why we sit down and say, have you done your estate planning? Have you done your wealth management planning? We can do a range of value report and give you an idea what it might be worth. But then if you don't tie into something like Sojourn to do that analysis, you're not going to know for sure if it's worth enough to accomplish your goals.
Yeah, definitely well said. So I'm wondering, again, if you are that business owner, and I heard you say range of values, I think is what I heard you say. Is that correct?
I did. It's a proprietary report that we prepare at Phelan Partners Limited. And it's important because the question of how much is my business worth, it has multiple answers, because it involves how much you're going to keep, how much is your business worth, and how much is your real estate worth. And it gets kind of complicated. You got to dig into the financials and do the spreads. But to try to make it simple, if you look at your balance sheet, you've got cash and receivables and payables. The net of those is something you're going to keep. That's your money. You've already paid income taxes on it. The value of the business might be a multiple of earnings. That's going to be separate. That's going to be subject to some capital gains taxes and so forth, depending on how much retained earnings you have in the business. And then third, every business either has leased some space or owns the space, and most business owners still own their businesses because then they can set up an LLC, lease it to the operating entity, and they've got various pieces of value. So each of those pieces, we get in and we analyze and we try to figure out the tax ramifications of what selling those pieces would be, and then give you a range of value that you and your partners can plug into Sojourn, so you can say, okay, if it's the lower end of the value, does that accomplish your goals? If it's the higher end of your value, how does that affect what you will be able to do after you sell the business? And the last question, what are you going to do when you retire and you're not tied to the business 24/7?
Exactly. So Tom, and that's always a completely different conversation, because you're right. Once you are a business owner and you kind of live and breathe that day in, day out, and then that piece is gone or you're transitioning away, right? That can be a big culture shock for many people, thinking that they're prepared for that transition, but sometimes aren't necessarily always as prepared as what they thought they might be. Tom, I want to go back to, I just think about conversations I've had with our clients that, again, are business owners. They're talking about, hey, I'm thinking I might want to sell my business. And, when I ask them, hey, what value should we add in Sojourn? Like what do you think your business is worth? And so oftentimes they'll just kind of come up with a number. We'll use that in Sojourn. But that may or may not be the correct number, right? Factoring in whether it be taxes or, various other things along the way. Do you think if a person is thinking about starting that pathway of, hey, I have to come up with some kind of an exit strategy, I'm kind of guessing what I think the valuation is. Do you think step number one is work with someone like you and your team to first figure out what a more accurate valuation is versus just kind of guessing? I mean, how would you start that process for someone?
A lot of business owners sit down with their CPA, who do their taxes every year, and they know a lot about them, and just say, what do you think the business is worth? Sometimes they'll say, let's do an appraisal. I would tell you that if you could line up 10 appraisals, that'd be 10 values.
Okay.
But a big part of it's complex because, for instance, what you keep off your balance sheet is generally not taxable. If you're selling your inventory, a buyer's going to buy that for cash at cost. There's no gain, so there's no tax there. If you're selling your business for a multiple of value, there's going to be some taxes over and above what your retained earnings are, depending on how the business is organized. And then real estate's separate. And all of this is going to be impacted by your tax status, whether you're a C corporation, a LLC, or a subchapter S. All those taxes and fees and all those things figure into it. So when you're saying, how much is my business worth? I'm feeding back to you, what's it worth after taxes and fees and all the complications and everything's filed? How much is left? And is that enough to accomplish what you want to accomplish in retirement? And as I alluded to earlier, have you given any thought to what you might do when you're not here 24/7 running your business? And more often than not, business owners really don't have a good idea on that. So the sooner you can start planning for this, the better.
Okay. And Tom, so what I heard you say, just to repeat it back, is it sounds like the first step might be talk to your accountant, talk to your CPA, try to get kind of an initial valuation or an idea from the CPA before we kind of head down, before we kind of head down the path further to say, okay, maybe I'm going to work with someone like your firm or another firm as to kind of taking that to the next step. Is that a safe statement to say?
I think it is, and without spending a lot of money, you can have that conversation, get kind of a ballpark value, and then ask yourself, is that close? And ask the CPA what kind of tax implications would that have? How much money's left? And then sit down with your wealth manager and say, here's what I think I can get out of my business when I sell it. Is that enough so that I can go do these things I want to do after I'm no longer running the business every day?
Okay. All right. So that's some great advice. So if we kind of take it one step further now, enterprise value. Do you want to just share with our listeners, what is that? And what does that mean to a business owner?
Well, enterprise value are going to be the drivers of the real value of your business. And it gets down to really basic stuff. What type of business are you in? Is it manufacturing, services? What makes you different from your competition? Why would I buy from you instead of buying from them? Do I have a next generation of managers in place that are running the business, that have the customer relationships? Are they ready to continue to run the business after the business owner steps back? Is your business ready? Do all your procedures in place? Are your policies in place? Does the manufacturing shop look good? It's just like selling a house. Let's prepare it before we sell it. And then if you get all of those things right, then you might be ready to sell if it's worth enough. If not, planning and preparing is going to be a huge item, because there's a lot of those things that will give a potential buyer some confidence that they can replicate your revenues and that they can work with all of your people that are in place after you're out of the picture, which is a big item. If you're running the entire business and doing 99% of the work and you leave, what's going to happen to that business? Mm-hmm. So planning and preparing is huge, and it really should start the day you start or purchase your business, and try to figure out, how long am I going to keep this? At what time in the future is it going to be worth enough so that I can go on to the next thing? And how do I get it ready and get it so that it's worth as much as possible at the time we pull the trigger and go to sell?
Okay. So Tom, just to take that one step further, is this contingent or specific to, because to what type of business we're talking about? So like another way of saying this is, are there like specific financial metrics that you would recommend to focus on to kind of make the business more attractive to potential buyers? So is there anything specific, or is it so vague depending upon the type of business? Like how would you answer that for someone? Because when I think of our clients, I mean, the type of businesses that they own, they're all over the board, right? They're all over the board. And so you're talking to one client about their particular business, then a different client about their completely different type of business, but they're all asking the same question, right? They all want to figure out how they can increase that enterprise value. So how do you go about giving someone recommendations for that?
Hey, real quick, thank you for tuning into this well-balanced podcast brought to you by Vector Wealth Management. We're a full-service, fee-based wealth management firm working with clients across the U.S. We do financial planning and investment management for individuals and families. If you are new to Vector and would like a portfolio and plan review, go to our website, vectorwealth.com, and click on the free assessment to get started. And now back to our show.
That's a hard one to answer in general. I like to say that all businesses are alike, but they're all different. And they really are, whether it's manufacturing or distribution or services. They're all going to have income. They're all going to have expense. They're all going to have net profits. When we go to take a look at a business we're selling, you can figure out an asset valuation. What are the assets of the business? Furniture, fixture, equipment, vehicles, people, tangible, intangible assets worth minus your debt. Or we can take a look at a multiple of income, which means we take the income or the average income over the last 3 to 5 years and put a multiple based on that. And then just like in real estate, you'll say comparable sales might be another valuation method. That fits in because if you're a widget manufacturer, say up in St. Cloud, Minnesota, doing $25 million a year, and I see your profitability, I can go out and find out what every other widget manufacturer that's sold recently in the country has been paid in terms of a multiple of value, and then we'll have an idea of what kind of multiple of your earnings might be appropriate. That's going to be adjusted by intangible assets, non-balance sheet assets, and other items. So it's to try to simplify it and say, what can you do? There's a lot of different ways to do that, and we've mentioned most of them in my book. But you need to sit down with some advisors that you trust, your CPA, your attorney, your wealth manager, your estate planning attorney. And then if you hire someone that's got experience in mergers and acquisitions, then they can tailor that advice to your specific business, because there will be things in your industry that are unique that aren't the same in other industries. So I'm sorry I don't have a simple answer for you on that one.
No, Tom, let's face it, sometimes there are no simple answers, right? This is that, and that's why we're having this conversation, because this is a complex process that takes time. And I feel like, right, every scenario can be different. And so I wouldn't expect a complete cookie cutter answer from you. So your answer makes perfect sense. I do want to go back. I heard you mention briefly just a few minutes ago that you talked about kind of, if you're the owner, you're there, day in, day out. But talk about, does having a strong management team in place or key employees in place, does that really have an impact on a company's valuation or the attractiveness maybe to other investors? How important do you think that is?
Sharon, that's maybe one of the most major factors in being prepared to sell. When a buyer comes in, they want to make sure that your team is in place, they're experienced, they're knowledgeable, they know what they're doing, your process and everything is in place, that you've transferred your customer relationships to the sales team, that you've got a foreman out running the shop or the floor, that you're not doing those things. We had a business about a decade ago where the owner was proud and he was doing everything. He had the customer relationships, he was doing the accounting, he was running the shop, he bragged that he hadn't left the shop for 100 days last year, stayed there and showered there. And when we took a look at it, we just plain told him, if you're out of the picture, your business has no value because you haven't empowered your employees, your team, to take over those responsibilities and those relationships. And so we talked him into putting that next generation of management in place and waiting a couple of years to sell it and trying to get himself out of the front line of running every aspect of the business every day. And he began to understand that that was value. And then once we got that done, then we were able to attract some buyers that say, okay, he's got a team in place. I can come in, I can manage, I can sit on the board, but they have those relationships, they have those duties, they have been enabled to run the company. It's a huge, huge, major item.
Yeah. Tom, would you say in your experience that that's one of the biggest challenges that you've seen is exactly what you just said when you mentioned this individual who had been there 100 days, which I can't even get my head around. But do you feel that letting go is one of the biggest hindrances that you see during this entire process?
Sharon, if you run your business, but if you put yourself in the shoes of an owner that's run a business for 10, 20, 30 years, they are completely involved in the business, and having to let go and step away is one of the most difficult things they can do. Look at me, I'm still running my business. I don't want to step away. But the other part of that is when it comes time you found a buyer, you negotiated a price, you've gotten through all of the things you have to, and now we're a week or 2 weeks out from the closing date. More often than not, the seller's going, is having seller's remorse. Oh no, what have I done? And what am I going to do after I sell this? And all of a sudden they realize that whoever wrote the check to buy it, they get to call the shots.
Yes.
And you've got to step back and you've got to say, okay, the big problem in society today that I see is we're all too identified by our jobs, by our ownership, by whatever we do. And once that's over, who am I?
Yeah.
Even if I'm talking to the neighbors, oh, hi, what do you do? Oh, I'm retired. It doesn't, for business owners, it doesn't fit. So planning and preparation is huge, but planning and preparing for retirement and what comes next, and sitting down with your spouse and saying, okay, you've suffered all these years while I focused on the business. What would you like to do in retirement? And what should we do together so that we can have a fulfilling retirement when you've been supporting me all these years? That's another really big question.
Yeah. If I can just for a moment, I just want to share my experience. So many of our listeners know that Vector Wealth Management was owned independently. I was one of the owners, along with obviously Tom Fee, our founder, and a few others. And we did sell a few years ago to a company out of Austin, Texas, Kestra. So Blue Spring Wealth Partners is our parent company, which is rolled up under Kestra. And I'm still here at Vector and plan to be for many years, certainly. But Tom, some of what you said resonates with me because even though I stayed on with Vector, there was a sense of loss because you're so used to making every single decision, not being accountable to anybody other than just your local partners here. And so going through that process, it was weird. It was weird to kind of let go of some of those reins. Certainly, we have maintained the majority of them, which is why the transaction was basically invisible to all of our clients. But internally, there was a sense of change, and that took time to get adjusted to that. It's worked out great now because now I'm still here, and a lot of that stuff that you really didn't want to do on the day-to-day basis, all that behind the scenes, maybe HR stuff, accounts payable, accounts receivable, all that stuff can be offloaded to someone else. So then it gives us time to focus on what's really most important, which are our clients like you. So I can relate with that piece about letting go, learning to let go, and actually having gone through it a little bit myself. So
very, very difficult, but I'm sure one of the things that you're happy about is the other guys have to worry more about compliance than you do, which in your industry is a big deal. So you can get used to it, but it is a big change.
Yes.
And you have to live with it, and you have to learn how to live with it and keep evolving. Exactly. It's doable. Business owners have done it for hundreds and hundreds of years once they sell because you can't take it with you.
That's right. And you know what? Since you mentioned that kind of transitions over to our last kind of bullet point, which is talking about, again, when do we start thinking about that exit strategy? And one thing that you just said is, well, you can't take it with you, and that's true. We have had scenarios where business owners have unfortunately had, an unfortunate health event come up, or an untimely health event come up, or some other life event that has kind of been the catalyst for them to look for ways to exit their business. So when you think about talking to somebody about exiting your business, how does a business owner know when is it the right time to start planning for their exit?
Great question, and I'll give you a little tip at the end of my answer here. But to all the business owners out there that are thinking about maybe selling this year or next year or soon, my best advice is make every decision thinking that you're going to keep that business for the next 20 years.
That's interesting.
Because those decisions will be good for you, and they're going to be good for a buyer. And then we used to do a lot of these seminars on retirement planning. And I used to ask everybody in the audience, what's a good time to retire? More often than not, they said 65. My answer, and this is the one I want to give to you, is 65 is no magic number. What is magic is how much are you worth? How much have you saved and invested? How much is your business worth? How much are you going to have left at the end of the day? And at what age is it enough? The question, how much is enough? Well, the question, how much is enough, depends on what is it you want to do. But if you're a successful business owner, you might get there at 55.
Yeah.
So why spend the 10 more years attached to that business, working day and night, when you could be out maybe doing something more fun with your family, your children, your grandchildren? Don't think about retirement as an age. Think about retirement as, when am I ready? When do I have enough to accomplish my goals?
Yeah. And Tom, one thing I always tell our clients is, as it pertains to work, when because you keep saying, hey, one of the things that a business owner should have a clear understanding of is, do I have enough? And so I will oftentimes tell our clients, when you have enough, work because you want to, not because you have to. And there are many times where we've had clients, and I've said repeatedly, your sojourn plan shows that your assets are going to outlive you, and yet they continue to work. And I get that, but and again, if that brings them purpose and passion, then fantastic, because then you're working for the right reason, and it's not because I have to. So I think that's really key to kind of self-reflection. What do you think about that?
Sharon, I think you nailed it head on. And for anybody that's been paying attention, they've heard that I'm a Vietnam veteran, so I've been around for a while. I have some partners that are younger than I am, and they lead all the mergers and acquisition, all the sale deals that we're doing. But I actually spend 60 to 70% of my time on volunteer activities helping veterans because I choose to. I enjoy having my building, I enjoy having my base, the business to go to, and I enjoy being the old guy that can give some advice, ask some questions, provide some tax strategies. So I keep going in because I like to go in, and it's a base to do my volunteer work. So it's in the middle. Do you sell and retire, or do you keep it and stay? I'm at a place where I have my base, I can do my volunteer work, and I can still be helpful to the mergers and acquisitions business. So don't get painted into a corner. Make it what you need it or want it to be, and make that decision with your spouse and your family.
Yeah, very well said. Tom, when we think about selling a business, I'm going to pivot here for just a second. What's maybe one of the biggest mistakes owners make, or that you've seen when they're preparing for an exit?
Biggest mistake I've seen over the last several decades is a business owner that's running his business, things are going well, and all of a sudden, here comes somebody in from the blue saying, I want to buy your business, and here's a great big check. And they get enamored with that check, haven't done the tax planning, haven't done the wealth management, haven't done the estate planning, but they say, wow, if I don't take that check, I'm missing the opportunity. How do they really know what the business might be worth? The only way to really know what it's worth is to go out in the marketplace and have multiple buyers, and you'd be surprised they all come in close or near to the same price. So the biggest mistake I've seen is they get enamored with the check, don't have good advisors around them to say, let's do this planning properly, and then they sell, and then they wake up and find out, I made a mistake. I should have kept that business a while longer. I should have prepared it. It could have been worth more money. So I would say, as we've said all day, be careful, do your planning, get good advisors around you, sell at the right time for the right price, and have a high confidence level that you can get to that how much is enough number, which is different for everybody.
Yep, absolutely, absolutely. So Tom, well, thank you. So today we've covered highlights on business valuations, increasing enterprise values, and we talked a little bit about some things to think about from an exit strategy. And it's clear that there is a lot to consider. And with your insights, of course, hopefully they will undoubtedly help many business owners navigate these very complex decisions. But before we wrap up, is there any kind of final piece of advice you'd like to give our listeners, particularly for business owners as they are thinking about their exit strategy?
Well, as we've said all day, planning is everything. And having top-notch good advisors that will give you the best advice, whether or not it's good for the advisors, tell you the truth, and then challenge you to say, what do I really want to do? How much longer do I want to work? And how much money is enough so that I can enjoy and reach my goals in retirement? So be careful, do your planning while you're at it, build your business piece by piece, keep building that enterprise value every day.
Well said, Tom. Well, again, thank you again, Tom, for being with us today. And to our listeners, if you're considering an exit strategy or just simply want to learn more about maximizing the value of your business, remember, like Tom said, planning ahead is key. It's never too early to start thinking about your future and your long-term value of your business. At Vector Wealth Management, we're definitely here to help you navigate this information. And if you have any questions about your situation or how to plan, feel free to reach out to our team today. And if you're new to Vector, you can call to schedule a meeting to learn more. Tom, if our listeners would like to connect with you, what is the best way that they can do that?
Well, the easiest thing to do is call Sharon and talk to her, and she'll give you my number.
Happy to do so.
After that, if they go to our website, which is Faelon, FAELON.com, all of our information is there, and they can even, if they wish, get a copy of my book, Exit Strategy, How to Maximize the Value of Your Business.
Tom, let's just do a shameless plug. Could I hear just a little bit about that book before we wrap up for today?
That book goes back quite a few years, and I wrote it. It took me 2 or 3 years because most business owners didn't know about the things we've talked about today. The wealth manager, the estate planner, the various estate planning devices that are there, what your business is worth. All these issues are covered in general in that book. And it's not a book on selling your business. It's a book on how to plan and prepare for the sale of your business and how to engage good advisors to help you make good decisions. Okay. And its feedback over the last 20 years has been pretty positive, and it's still available in case anyone's interested.
Fantastic. And Tom, I also want to again mention to our listeners that you are going to be doing another podcast with, again, my colleague Chris Wagner, where you will be discussing more about your philanthropic work that you've done, particularly for the military and for veterans. And so I would encourage our listeners to tune into that podcast as well. That's all for today's episode. If you find this information helpful, we welcome you to share it with others who might benefit from it. Thank you for tuning in, and we'll see you next time.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment